Hi guys, we often hear about investing for the long term, like for retirement or for our family. And that's great. But let's be honest, we live in the present moment and what we have today is all that matters. Investing for the long term is a futuristic plan, but what about today or a few months later? Do we have enough savings that can help us survive for a few months down the line? Most probably the answer is no. You might be saving for your dreams, for your kids, or even for your dream house. These goals aren't long-term goals, they're usually in the midterm. And I'm sure you might be facing problems pertaining to your midterm goals. This is where midterm investing comes into picture. And this is what most of us fail to understand. So in this video, I'll take you through a step-by-step process so that you can make your money work smarter for your midterm goals as well. So the first and most important thing to understand here is, what kind of investor are you? Are you a conservative investor who doesn't want to take any risks? Or an investor with some risk-taking ability? Based on this, let's get into different ways people invest their money on how long they plan to keep it invested. First is short-term investing. This is like quick buying and selling, sometimes in just minutes. But for most of us, this can be a very bad idea. We don't have the same fast information or special tools like they do, so it's always better to stay away from these ideas unless you are an expert in it. Second comes long-term investing. This is when you stay invested for a very long period, like 10, 20, 30 years or more. You're usually betting on big ideas, like a growing industry, or companies that you believe will be super strong in the future, like Google, Microsoft, or Amazon. You buy them and mostly forget about them for a long time. Third is midterm investing. This is our focus category for today, and it's perfect for most everyday investors. With midterm investing, you have a clear idea of when you might want to sell your investment. Maybe you buy a stock hoping it will go up 20% in the next 1 to 3 years, and when it does, you sell it. Or you invest based on a specific event you think will happen in the next few years. So now we have a basic idea of midterm investing. Honestly speaking, this is just a theory which most probably will not help you practically in any means. To understand this in depth, we need to answer a few more questions like, what are the alternative ways to do midterm investing? Or how do you actually do midterm investing? Well, it's simpler than you think. One of the ways is following macro themes. Now, what do I mean by this? Sometimes really big things happen in the world or in big industries. These big changes affect lots of companies. You can put your money into things that are getting a boost from these big changes. So let's understand with an example of AI revolution. This is a big change. Right now, it's about computers getting super smart and doing things humans used to do. Companies are spending lots of money on AI to make everything better and faster. This change isn't just for a few months or so. It's going to last for years. So how do you plan to invest? You could look at companies in India that are working with AI. Maybe they are tech companies that build AI tools or data centers for businesses. Or maybe they are banks or factories that are using AI to make their own work much smarter. So the plan is, you might put your money into these companies because you believe this huge AI change will help their business grow a lot over the next 2 to 5 years. If their share price drops for some reason, it might be a good chance to buy more, as the big AI trend is still very strong. Another example is India's manufacturing sector. India is really pushing for manufacturing. This means more factories, more products are being manufactured in India and exported to other countries. This is a big plan from the government and it's a long-lasting change for our economy. Now, how do you plan to invest in it? You could look at companies that are building things in India, like companies making electronics, semiconductors, accessories, or even defense items and have a long-term vision. Now you have learned the basics of investing. But if there's no plan to work on it, everything is useless. And here's the 5-step plan to start with midterm investing. Step 1. Divide your money into buckets. Now, what do I mean by this? Investing your money in 3 different groups or buckets. First is short-term money. This is money which you would need very soon, like for bills or groceries. Keep this money safe and don't invest it into risky asset classes. Second comes midterm money. This is money you need in a few years, like 1 to 5 years, for things like a new car or a trip. And third is long-term money. This is money you need far in the future, like 10 years or more, like for retirement. So now we have divided our money into buckets. What's next? Step 2. How much to invest? Please note that never invest 100% of your capital into any investments. If the market looks fair right now, maybe you invest 50% of your investing capital and keep 50% as cash. This cash is your safety net. It lets you buy more if the market goes down or for any unexpected needs. Step 3. Choose good investments. Make a list of good quality investments you might want to own. This could be big famous groups of stocks like the Nasdaq, which has big tech companies, or the Nifty 50, which has top Indian companies. You can also add a few smaller but still strong companies that seem to be good. Try to have at least 20 different ideas on your list. This helps you in diversifying your risks. Now you know where to invest and how much capital allocation is to be done. But there are some smart money rules that you need to follow. Which brings us to step 4. Build your portfolio smartly. This is super important. Don't put all your eggs in one basket. The rule is, don't put more than 5% of your capital into just one company. If you're investing in smaller companies, invest less into each company. Maybe around 2% of your capital. This protects you if one company doesn't do well. Step 5. Take your profits. This is key for mid-term investing. When your investment reaches your goal, it's time to exit some of your positions and book your profits. This helps you manage your cash and gives you money for your expenses. This is the main goal of mid-term investing. Learning to manage your money with mid-term investing gives you a lot more control over your financial future. It's a real way to grow your money and make sure you have funds ready for those important life events that aren't decades away. Plus, any extra money you make from mid-term investing can always be moved into your long-term savings too. And yeah, that's all for today. Hope you enjoyed the video. Keep learning and I'll see you soon.